It's the banana. We're about here. This is the point. We're about here. But we've got the actual banana zone, which is when liquidity drives everything crazy. And then you start seeing those wonderful charts of Bitcoin. Each cycle, they kind of do this, and then they do this. Yeah. It's when no laws apply anymore. The law of the banana rules all. And it always happens after the halving, which is kind of here. There's a bit of chopping around. And then as we start heading into the US election, between June and August, prices start going vertical.
Raoul Pal's banana zone thesis is one of the most eagerly awaited trends in the cryptocurrency community for 2024. The Real Vision founder and CEO foresees a phase in the crypto bull market where prices will surge dramatically, driven by improving liquidity as central banks resume quantitative easing and money printing to avert economic crises. According to Pal, this highly anticipated period could be just weeks away. Once it begins, he predicts crypto asset prices will skyrocket so rapidly that keeping up will be challenging. Pal forecasts that the overall crypto market cap will quadruple by 2025, increasing from the current $2.2 trillion to $10 to $15 trillion as we enter the banana zone. Raoul Pal recently discussed his views on the banana zone, global liquidity conditions, and the cryptocurrency market in a series of tweets on X. He explains that the business cycle, consisting of expansion, peak, contraction, and trough phases, is driven by the global liquidity cycle, which has shown distinct patterns since the global debt reset in 2008. Following the Great Financial Crisis, central banks set interest rates to zero, initiating a new cycle of interest payments approximately every 3 to 4 years. This reset fostered a favorable macro cycle that aligns with the U.S. election cycle, often boosting economic activity, and coinciding with Bitcoin's 4-year halving cycle. In one of his tweets, Pal elaborates on what he calls the everything code. He explains that the business cycle nearly perfectly repeats as liquidity rises to debase the currency to service debt rollovers. Without this, yields lose their anchor in a debt spiral. The effect of debasement is to lower the value of fiat currency, making asset prices appear to rise. Pal's insights highlight the interconnectedness of macroeconomic cycles, central bank policies, and the cryptocurrency market. His observations suggest that as liquidity increases to manage debt, it devalues fiat currency, making asset prices seem higher. This cyclical pattern, tied to global liquidity and economic policies, provides a framework for understanding the rapid changes and significant growth in cryptocurrency markets.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Right, the whole system is set for number go up. That's what debasement of currency does. When you have an over-indebted system, the collateral of the system, the assets, can't go down, because if not, you've got too much debt versus the assets, and that's what happened in 2008. So the whole system is based on that. The baby boomers are all going into retirement. You can't let their assets go down, because if not, they've got all the wealth. So therefore, consumption will collapse. The number can't go down. So as opposed to number go up, you could say the number can't go down. So the liquidity cycle is just an element of that. It's the actual mechanism by which it happens. If you're 30, you shouldn't give a shit about that cycle. You should just use any weakness to keep buying more number go up assets. For others, it then becomes a cycle to try to take some risk off the table, because it's a volatile space, particularly in crypto or technology investing. Both work well. But then you come to the question is, and most people get to this, is everyone thinks, yeah, I'm going to take money off. And then you're like, and where am I going to put it? Because as soon as I take it off, debasement's happening again. So you might put it in stable coins for a bit. Sure, definitely cash in lifestyle chips, buy that house, do that thing that you want. But after that, it's difficult to think about getting out. The reason Jeff Bezos is the richest man in the world is because he didn't sell his Amazon equity. Right? People forget that compounding returns. Bitcoin since 2012 is up 22 million %. It's 140% a year. In that is 4 down 85% bear markets. And it's still that. Solana was down 97.5% last cycle, or 98.5%, sorry. It is still compounding at 240% returns. All assets are correlated to this, the business cycle and the everything code cycle. It's all a debt refi cycle. So if everything is correlated, then diversification doesn't work. So if diversification doesn't work, then you want to own the asset with the best risk-adjusted returns. Now, this is where people get weird. They're like, yeah, but crypto goes down 80% every 4 years. On a risk-adjusted basis, it is an alien asset class. The reward so far outweighs the risk that people can't get their heads around an asset that goes down 98% like Solana and still compounds at 250% a year. So when I take a chart of everything, I just compare one asset to another. And I look at the chart of NASDAQ, looks amazing. It's a log, secular, exponential trend. Divided by the price of Bitcoin to see relatively how it's done, it's down 97.9%. There is no second best. Making another investment decision is suboptimal if you've got the right time horizon. You know, it doesn't work if you choose too short a time horizon, but choose a 5-year, 10-year time horizon. It's ludicrous, the difference that you kick yourself if you went, oh, I had choice of the orange pill or the blue pill, and I took the blue pill and it's gone up, but I've made 99% less than I would have if I'd taken the orange pill.
And
we've never seen anything like this before. So this is super unusual. People can't get their heads around this.
During the discussion, Pal highlights 2 memes he has popularized to educate and inform investors about the immense opportunities in the cryptocurrency industry and how to maximize them. The first is his "Don't F This Up" meme. Pal believes the crypto market cap will rise from $2.35 trillion to $10 to $15 trillion next year, and reach $50 to $100 trillion by 2030. He emphasizes that the potential of this nascent industry is enormous. Therefore, engaging in practices like using leverage or overly focusing on speculative assets can lead to significant losses and missed opportunities. He encapsulates his advice in a tweet: remember, no leverage, no FOMO. Top 3 to 5 assets as your main bag, self-custody or multi-sig with good wallet hygiene. Only trade a small dender bag. HODL over a longer time horizon, zoom out and ignore the noise. Expect 35% pullbacks frequently, buy the dip if you can. Pal also discusses his banana zone thesis, which, according to his latest Twitter post, is slowly ripening and should fully materialize by autumn. Here are more clips from the interview.
I had learnt from the last cycle that even if you're vaguely vague about how to navigate the space, people will A, get it wrong so badly, and then they'll blame me for it. There's a bit of self-preservation in this. So I'm like, okay, I'm going to make it a meme that is super clear. I'm going to launch an NFT that you put in your Solana wallet that looks at you and says there's a little video file of me saying, don't f this up. And it's basically, don't use leverage, don't FOMO, self-custody, and keep most of your assets in the major tokens. Just simple rules of thumb that don't lose your crypto, don't lose your crypto, don't lose your crypto, don't lose your crypto. You know, if the mega trend is going from 2.5 trillion to 100 trillion, honestly, you betting on, some random meme coin is not the best way to capture that trend. You might be able to get a bit of that right. Capture the trend first. Then you can trade around it a bit. But if you do not capture that trend, you will have done the opposite of the message. If I keep telling people, and again, this means a lot. It's like, this is the biggest opportunity. Don't come to me and tell me they made money and you didn't. Literally, there are thousands of high quality people into this space trying to help. None of us have all the answers. Don't expect us to be gurus, but we are trying to help. We want everybody to come with us. It's also self-interested because the more people that come with us, the more people succeed, the more the space is valuable.
What's the banana zone? And why did you come up with the banana zone meme?
So Julian Bittel and myself were writing Global Macro Investor, and we were looking at Q4 2023. And we're like, pre-election cycle years, liquidity, everything means that generally things should go bananas in Q4. So we wrote an article and we said, we called it the banana zone because things go bananas. Cut to, I don't know, by about March, April, maybe March, we had started applying it to say, okay, that was the banana zone for that quarter, but we've got the actual banana zone, which is when liquidity drives everything crazy. And then you start seeing those wonderful charts of Bitcoin. Each cycle, they kind of do this, and then they do this. It happens to be that. And it's when things go bananas and people this up because they lose their minds, they FOMO into everything. It's when no laws apply anymore. The law of the banana rules all. And it always happens after the halving, which is kind of here. There's a bit of chopping around. And then as we start heading into the US election, between June and August, prices start going vertical. Doesn't mean we don't get these sharp corrections in the middle, but things go vertical and we will lose our minds. If we are having this conversation in 9 months' time, we'll be fighting with ourselves to try and maintain the discipline that we've been trying to teach ourselves because the banana zone will be happening. And it just caught everybody's attention because it explains a lot, right? That explains my entire macro thesis that I spent 2.5 hours explaining, and I could have spent 6 hours explaining, is all in that chart. It is also, he says, phallically, everybody's hopes and dreams.
And it's about to happen.
I fucking hope so, because I will never be allowed on the internet again.
Raoul Pal has shared his expectations for the highly anticipated banana zone, predicting it will begin sometime between now and August 2024, extending through June to December 2025. During this period, Pal foresees a dramatic surge in both crypto asset prices and adoption. He anticipates that the overall cryptocurrency market capitalization will rapidly rise from its current value of approximately $2.35 trillion to at least $10 trillion by 2025. Pal predicts significant gains for individual cryptocurrencies, with prices potentially tripling. Specifically, he projects Bitcoin will soar from its current price of around $64,000 to approximately $270,000 per coin. Even in a less optimistic scenario, he expects Bitcoin to reach at least $200,000. Additionally, Pal is particularly bullish on Ethereum, forecasting it will outperform Bitcoin. He is also highly optimistic about Solana, predicting it will surpass both Bitcoin and Ethereum in performance. These projections suggest a period of rapid growth and significant value increase across the cryptocurrency market during the banana zone. What are your thoughts on Raoul Pal's outlook for crypto, tech stocks, and macro trends in 2024 and 2025? Please share your comments and predictions for your favorite crypto assets in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.